What if everything you've been taught about national debt is backwards? What if debt isn't a problem governments accidentally fall into, but a system they're designed to operate inside forever? Tonight we're going to uncover something most people sense, but can't quite explain. Why every nation, rich or poor, stable or collapsing, democratic or authoritarian, seems permanently trapped in a financial loop that no election, reform, or protest ever breaks. A loop that keeps countries borrowing, banks profiting, and ordinary people footing the bill. But here's the twist. The system that traps nations today didn't begin with modern banks. It began with an ancient idea, an idea that evolved into the global debt engine we live under now. And once you understand how it works, you'll never see government spending, inflation, or economic crises the same way again. This is the story of the hidden debt engine that keeps every nation quietly dependent. Before we dive into modern national debt, quantitative easing, or central banks, we must travel back to a time when money wasn't paper, wasn't digital, wasn't even money as we know it. Because the roots of this system begin with control, not currency. Picture ancient city-states, Mesopotamia, Uruk, Babylon. These were some of the first civilizations with structured economies. And archaeologists discovered something surprising. The earliest financial records weren't about trade, they were about debt. Clay tablets show not gold transactions, not silver payments, but IOUs, promises, obligations. Debt long before coins was the original tracking system of power. Over thousands of years, leaders refined this. Kings, priests, merchants, they all learned the same lesson. If you control the unit of debt, you control the people who owe it. But as societies grew, the system scaled. Debt shifted from personal to political, from temples to governments, from clay tablets to the machinery of modern finance. And the moment debt became a tool of nations, not individuals, the world changed forever. Because when a person is in debt, they are dependent. But when a country is in debt, an entire population becomes dependent. And that dependency is the quiet mechanism that still runs the global economy today. But how did it happen? Who built the modern version of this system, and how did it grow so powerful that even superpowers can't escape it? To answer that, we jump to Europe, the 17th century, where the next chapter of the debt engine begins. It's the late 1600s. Europe is engulfed in wars. Kings are desperate for money. Taxes aren't enough. Gold is limited. Armies are expensive. One country in particular, England, is drowning in battlefield costs. In 1694, a group of wealthy financiers approached the English government with a revolutionary idea. Let us create a corporation. It will lend money to the crown, in exchange for the right to manage the nation's debt, and issue banknotes backed by that debt. This institution became known as the Bank of England. It was the world's first central bank. Not a government department, not a public utility. A private corporation with an extraordinary privilege, the power to create money by creating government debt. This was the moment the modern debt engine switched on. Because now, instead of taxes funding the government funded itself through loans. Loans that would require interest payments, that would require taxes, that would require more loans. A perfect loop, a self-feeding mechanism. A government addicted to borrowing, a banking system addicted to lending, and a population required to pay the interest forever. This model spread from England to France, to Germany, to the United States, and eventually, to nearly every nation on Earth. But as the system expanded, it evolved into something far more powerful. It no longer just financed wars. It became the foundation of economic growth. The engine beneath modern capitalism. A system that rewards debt, punishes savings, and perpetually funnels wealth upward through interest, inflation, and currency dilution. Let's fast forward to the 20th century. The world has just survived 2 world wars, a global depression, and economic collapse. Nations need rebuilding, infrastructure must be repaired, economies must restart. The question isn't should governments borrow. The question is how much can they borrow without collapsing. Enter the Bretton Woods Conference of 1944. While the public saw it as a meeting to stabilize global trade, behind closed doors, a far more significant decision was made. The debt of nations would be managed through a centralized global framework. Out of it came the IMF, the World Bank, and the US dollar as the anchor of global finance. But here's the key. These institutions didn't just help countries borrow money, they standardized borrowing. They normalized borrowing. They created formulas, ratings, credit scores for countries. Debt was no longer a sign of crisis. It became a national measurement tool. A country with more debt growing, a country with less debt lagging, a country that refused to borrow, uncooperative. In other words, economic success was redefined as debt expansion, and under this new system, the more dependent nations became on external financing, the more leverage financial institutions gained in shaping policy. This wasn't a conspiracy, it was the natural evolution of a system where governments no longer issued money, but borrowed it. The debt engine had become global and unstoppable, until something happened that no one predicted. Countries started to break under the weight of the very system they depended on. By the 1970s, inflation was out of control. The US dollar was unstable. The gold standard cracked and finally collapsed in 1971. For the first time in history, money became completely detached from physical reality. No gold, no silver, just trust and government debt. This unlocked something new. Governments could now borrow without limits. Banks could lend without limits. And newly created money could flow into markets instantly. Debt became the fuel of the global economy. Consumer debt, corporate debt, sovereign debt. Every sector relied on borrowing for growth. But exponential systems always hit a breaking point. And by the early 1980s, countries like Mexico, Brazil, and Argentina declared they could no longer pay their interest, let alone the principal. The first modern sovereign debt crisis had begun. And this revealed a truth the public was never meant to see. A nation doesn't have to collapse for the debt engine to profit. It only needs to struggle. Because struggling nations need more loans, more restructuring, more conditions, more dependency. And so the engine got stronger. But this was nothing compared to what was coming next. Jump ahead to 2008. The world faces the most severe financial crisis since the Great Depression. Banks fail, investments crash, global markets freeze, and how do governments respond? You guessed it, more debt. Governments borrow trillions, central banks print trillions more, interest rates are slashed to zero. The debt engine didn't collapse in 2008, it multiplied, it accelerated, it broke every previous limit. By 2020, global debt hit a level economists once believed was impossible, and then came the pandemic, lockdowns, shutdowns, economic paralysis. The only solution: borrow more, print more, spend more. Today, global debt has grown to such an enormous size that many experts agree it is mathematically impossible to repay. Not theoretically, not politically, mathematically. And yet, the system continues because it can't stop. If it stops, everything collapses. That's the hidden truth behind the modern global economy. Debt isn't a flaw, it's the operating system. But what happens to operating systems that outgrow their hardware? They crash. And right now we're watching that crash unfold slowly, silently, predictably. Every few years, politicians promise to fix the debt, cut spending, raise taxes, stimulate growth, balance budgets, but the results are always the same. Debt goes up, deficits go up, dependence goes up. Why? Because the engine is designed so that every solution requires more debt. Trying to fix the system only strengthens the system. Let's break it down. 1. Cut spending gives economy slows, gives tax revenue falls, gives more debt needed. 2. Raise taxes gives consumption drops, gives growth falls, gives more debt needed. 3. Print money gives inflation rises, gives interest costs rise, gives more debt needed. For lower rates gives more borrowing, gives bigger bubbles, gives more debt needed. 5. Raise rates, gives debt becomes expensive, gives crisis risks increase, gives more debt needed. It's a trap with no escape route, because the system isn't built to end, it's built to expand. Let's look at the world right now. The US just crossed a debt level previously considered unpayable. Japan's debt to GDP ratio is the highest in recorded history for a major economy. European nations are struggling under obligations they can't meet. Developing nations pay more in interest than on health or education. But here's the most shocking detail. Every single country on Earth is now a permanent borrower. Not one is a permanent lender. That means the global economy is not a marketplace, it's a dependency network. Every nation owes, every nation pays interest. Every nation must keep the engine running, and the institutions at the center hold the leverage. Not through force, not through conspiracy, but through mathematics. Look at history. Ancient empires fell under debt traps. Medieval kingdoms collapsed under borrowing. Early nation-states surrendered autonomy to lenders. Modern governments depend on central banks. Entire regions now depend on global institutions. The pattern is clear and consistent. Debt creates dependency. Dependency creates control. Control creates predictability. Predictability creates profit. The same engine, just updated for the digital age. Nations don't borrow because they're irresponsible, they borrow because the system requires borrowing to function. The more a country owes, the less freedom it has to act independently. The global economy is now dependent on expanding debt. Stopping the engine would crash the system itself. The hidden debt engine isn't preparing to collapse.